Fishbone. I am the Director of Public Policy for GreenWay. We are an integrated charge point operator and mobility service provider operating throughout Central and Eastern Europe, also members of Charge Up Europe, and I am the Chair of Communications for Charge Up Europe. And if you're not familiar with Charge Up Europe, let me take a moment to explain that Charge Up is the industry association for the EV charging sector throughout Europe. We have over 40 corporate members and spanning the entire value chain from operating throughout Central and Eastern Europe, also members of Charge Up Europe, and I finally, what can policymakers do to continue to support the sector as it grows and becomes an increasingly critical part of the European transport industry and overall electrification and industrial actions? Another thing that Charge Up does is to develop high quality, reliable data sources. And one of those is our biannual State of Industry report. And so I want capacity of reliable data source charging electric vehicles. The power of those chargers is increasing. There is ever more power available for charging those EVs, in many cases taking place ahead of the growth of the vehicle park. Those are private companies, so we need to maintain revenue streams and sustainable business models and plan for the future of having the companies be sustainable and operational. And so utilization of the charging station, not just the number of deployed chargers, but also their utilization, is a key factor for the economics of EV charging and is something critical that investors are looking at. In many cases, today and tomorrow. And the final slide that I want to show you from Charge Up's 2025 State of Industry Report is a snapshot in time from companies from hardware manufacturers to CPOs to MSPs, all showing the vibrancy of the market that they're experiencing. And whether those metrics are number of chargers deployed, are kilowatt hours dispensed, or number of sessions, you can see that this is not a small market anymore. But at any given day, there are thousands and thousands of transactions taking place and hundreds of thousands of kilowatt hours being dispensed. We hear a lot of misinformation and let's say people who just don't know about the size and pace of the market. And are excited today's webinar to help share information with you, to dispel some of those myths, and to shed light on from what's actually happening as we see it from both the EV charging industry as well as from the finance side. And so with that, and we were saying that especially knowing that the automotive dialogues are coming up in December. And so with that, I want to welcome our panel. From the EV charging industry side, I want to welcome Dr. Kessler, who's the Director of Corporate Strategy from IONITY. And I want to welcome Gautier Chatelus, who is the President of DRIVECO. And from the finance side, I want to welcome Tim Van Pelt, who's the Global Lead of Clean Mobility at the Transition Accelerator, ING. And also Rico Luman, who's a Senior Economist at ING as well.
Nice to meet you.
Great. With that, Rico, I know you have some slides to share, so please take it away.
All right, I guess I'll share the slides then. Let's do that. That's probably the right way to go. I just wanted to give you a brief update and overview of the EV market in Europe as we are now operating in. Just for a couple of minutes showing some highlights. Obviously, transition of the car fleet is hugely important for European decarbonization. As mentioned already a couple of times also by organizations, it's 20% of total emissions almost in Europe, so it's hugely important to look into transitioning and pushing the transition. Also because we're not on track yet to meet 2030 targets in Europe. And as we all know, the cars, the EVs are already there, so the new technology is around, and it's frankly an easy way to decarbonize from a car perspective. And it's already happening. So as mentioned by Aaron, about 20% as we speak of total sales in Europe are EVs, battery EVs, and it's picking up, it's growing, and it will grow even further down the line because we're seeing an increasing demand for EVs. That shows where we're heading also into 2026. So it's happening already. It's similar for production in Europeans or main heartland, Germany, which is in the picture as well because it's struggling to shift. But it's already happening, as you can see here. Pictures are exports of cars. And you can see that ICE vehicles are coming down in exports and EVs are ramping up. So we're close to 40% of total exports now covered by EVs. And when you look at the operational costs, so that's the interest of the drivers, of course. You can already make it happen. So it could be an economically viable use case already. That frankly depends on where you can charge. In practice, it's always a mix of it. So when you do the math on a mileage basis for your personal situation, it could already be an attractive business case. We need to push ahead because the fleet is lagging, and we need to ramp up the sales to transition the fleet as well. So it's very important to continue to push ahead with it. And in Europe, there's growing differences between countries, which we could also very much link to charging infrastructure. and also to incentive programs, of course, which very much explains also the front-running positions of the Nordics, for instance. But it's differing across Europe, and we need to rely much more going forward on general public charging infrastructure. That's for sure, because the group which has already shifted, in many cases, they could charge at their home base or at work, and now we need to rely much more on public infrastructure to make it happen and to proceed with further adoption of EVs across Europe. Let me stop here, Aaron.
Super. Thank you, Rico. Thank you for that presentation from the viewpoint from your analysis. And I was just wondering if you could add a little bit of insight, maybe. What do you see as what's driving the growth of the EV market?
Well, obviously, the framework, the policy framework, is usually important to push OEMs ahead with production of EVs and also delivery of EVs, right? So that's an important one, and also the incentives mentioned. Incentives like subsidies, but also other incentives that you can have, are important. But what we do now see is that it's becoming economically interesting to look into EVs as an option for many more households. That's linked to all the mileages that you drive on an average basis, on a yearly basis, and where you can charge, as mentioned. But it's worth it to make the calculations here, and then you can find that with these more affordable models coming in, it could be an interesting option for you already.
Okay, super. Thank you very, very much for that perspective. And now, Meta, over to you. You have seen Rico's presentation. You saw the slides that I shared about, really kind of the snapshot in time, the momentum that the market is experiencing. IONITY is a pan-European public charging provider operating in every member state across Europe. So, you really have great data and insights on what customers are really doing, how they're really behaving, and how their charging patterns really are like. So what sort of activity are you seeing on the IONITY network, and how is it changing?
No, I think thanks a lot, Aaron, and also Rico for the presentation. I think we see very much similar trends which you presented overall, like growing need for public infrastructure, declining importance of home and workplace infrastructure. I think it's a little bit more nuanced when you look in more countries, because you look very much in the Netherlands. The Netherlands still a specific country because it has also a rollout of a lot of AC charging infrastructure. So we see, when we look in our network, we see a much more accelerating demand for public high power charging. So when I look at, for example, and high power charging is for us everything above 150 kilowatt. When I look, for example, in our data, for Germany in 2030, we expect 60% of chargings will still happen privately, which is higher than in the Netherlands and what we showed. But from the remaining 40% of public charging, 65% or over 65% will be high power charging, so public high power charging. So, and we are observing the same trend in also the other big European markets with a higher BEV penetration. So therefore, for us, the clear direction is public high power charging, not only along the highways, but also increasingly in the cities. From the pricing perspective, also here, I think it's a little bit more nuanced when you look in other markets. In Germany, for example, energy also at home is much higher than in the Netherlands. So, and we see also, I think your prices, which you showed here for high power charging, that was very much ad hoc charging. So when you go for subscription, for example, and you are in countries with a higher energy price, I think the break even is much earlier than shown in your slides. But overall, same direction here, what we see. I think, Aaron, one question. Yeah, so I think one question which you asked me already before was what kind of metrics we are looking at, and if we are looking at like usage, user habits, preferences. And there I would also like to give an example. We very much look at where our customers come from and where they charge. And that's really interesting because, I mean, IONITY is still very much a network very much on the highways, on long distance routes. And what's really interesting is, especially during the summer months, we see a significant share of drivers at our station which are coming from other countries where they don't live. So, for instance, in Germany, Austria, Italy, many drivers come from the Nordics and from Netherlands. And I think that's a great example for me always that long distance traveling is possible with EVs. It's already happening. It truly works. And for these drivers, we are also talking to them at our stations. There is no such thing like range anxiety. That just simply don't exist for them when they travel through Europe, from the Nordics to Italy, to Spain, through Europe, through Germany, through Austria. So it's just working. Therefore, I think good call out to buy yourself an EV because range anxiety is not the problem anymore. And I think another question for you was explicitly in Germany. I mean, IONITY is very active across Europe, and but we are based in Germany. Our headquarters is based in Germany. Germany is, of course, a very important market for us. But we don't track any specific KPIs in terms of Germany. So we track and analyze the same KPIs for all our markets, for our 24 markets where we are operating in. When we look at the markets, one KPI that we monitor, and particularly, is the BEV to HPC ratio. And that's not IONITY specific, that's market specific. So that's the ratio, how many battery electric vehicles come or are served by one high power charging points. And we as IONITY, we only look at high power charging points. And for Germany, in Germany, for example, the ratio is currently 60. So 60 BEVs are served by one high power charging point. And that figure is too low. So to maintain on an overall industry level a healthy and sustainable business model for CPOs, you need to be around 100, maybe even a little bit higher in the future. So here we see that we have built up front the curve as an industry, as a charging infrastructure industry. We saw a big decline of that number in 2024. That's now recovering with more BEVs coming to the market in 2025, but it will still take a couple of years until we reach the 100 again. So that shows that we need more and more BEVs on the street, and that rather sooner than later, to really sustain the momentum we have in the market with a sufficient infrastructure, and also to protect the capital we have all already invested in the market.
Yeah, super. Okay, thank you. So you answered all the questions. There was no need for a follow-up with you, but thank you for sharing all that, Dr. Kessler. You know, I mean, it's really interesting insights. And now I'm going to pivot over to Gautier, because, you know, you heard all of the presentations as well, and I know that you are also looking at what your customers are saying, and that DRIVECO just completed a survey of 3,300 drivers in France. So what have you learned from this?
Yes, thank you very much, and good morning, everybody. Yeah, and we had in this sample to more than around 300 electric vehicle drivers. So this was a study made with Toluna Harris, so it's a really large sample done by a sounding agency. And it's the second time we did it, based on the French market only. And we have undergone a huge EV bashing campaign last year in France. By that, the image of the EV vehicles has improved since 1 year. So we're quite happy for that. And what it shows, huge discrepancy between the EV driver owner and the people who don't own an EV car. There is a mismatch in the perception between the people who have it and the people who don't have it. Overall, for EV driver, 98% of the EV drivers say they're happy with their experience, which shows that, well, maybe they are early adopters, but anyway, they're happy with the experience. And 87% would certainly buy again an EV car next year. So that's globally shows that when you test it, you keep it and you're happy with it. As a second point, I would say that the image is increasing, but overall it's 53% of the people have a good image of the EV car, with, of course, a huge difference between the EV driver and the one that don't have a car. So 48% of the people who don't have an EV car have a good image of the EV car, and of course, about 90% or more than 91% have a very good image of the EV car among the EV drivers. What's interesting also is to see that young generation have a much better views, maybe 71% of the younger ones, between 18 and 24, have a very good image of the EV car. While in fact, among the elders, over 65 years old, it's only 38%. So it shows that it's a question of generation and people not having the old image in their mind, but the new battery, looking at the facts and the attractiveness of actually. A third point is about charging. We have more than 20% of the people say they are charging outside home, and among them, 82% are quite happy with the public charging we have, and 2/3 of them are charging on DC chargers, high-speed chargers. That's interesting. It's a huge increase. Before, AC was more used in the past, so that's also something that is important to know. The people who have EV cars are happy with the public charging stations in France, which is far from the image that people who don't own a car have. So just always think about that. There is this discrepancy, and maybe last point is that still one of the price is still seen, the acquisition price is still seen as a very hurdle and a bad image. Well, in fact, all the cars are expensive today, but that's not a question in the study, but the fact is that people find new cars, especially and we don't speak about company cars, really personal cars. But that's a hurdle. Even if people that have EV cars, many of them praise the economies they are doing when using it. It's one of the outcomes also, is that people are not doing it only for green. They are doing it because they make economies. So the people who knows, they see that they can make economics thanks to EV cars. And it's even more important for company cars, of course, where the fleet manager, they know how to do economics and to see at the full TCO of a car. So I think that's what we are saying is based on fact, on studies about the people, and we have to work, and we want to pass this message, is that the image that people have on EV car, who don't know about the EV car, is a bit outdated on the charging stations, on the affordability of the new models, as you said in introduction, and on the quality of the car, the experience. And one key point also for us is that still many people want to have a long range autonomy, but we have seen that actually today about more than 70% of the people are using the car for any type of trips, including vacations or weekends. So even if they would like to have more autonomy, they are using it that way. And that's what we have seen actually on our stations during the summer, is that we had a huge increase in all the stations that are in the vacation areas, meaning that people are coming with EV cars in vacation. That's, I think, is also a lesson, is that autonomy is not an obstacle to go on holiday, to make long haul traffic, as it has been said just earlier. So that's also one of the key outcomes, as the car is for everybody and is for everybody uses, and a very diverse use, and that the charging stations are good for the EV drivers. They feel happy with the network.
Super. Thank you, Gautier. That was really interesting insights from your study in France. And, it confirms a bunch of other studies that have come out recently. So from Shell did their 2025 EV driver survey. I think it's 15,000 users, some similar findings. LCP Delta also has put out a similar EV driver survey, interesting results there. And also on this topic of TCO, of the cost of the vehicle and the total cost of ownership, Ivans had their 2025 customer car index report showing that TCO across many member states of Europe is actually more affordable as long as the right balance of home and public charging is maintained compared to a combustion engine vehicle. So when you put all the other, let's say, benefits together, it really becomes a very compelling offer. Tim, I want to hear from you. I mean, you've heard everything. You come from a really interesting perspective, maybe not one that is heard so often in these types of public events from the finance side. And I want to know, what are you looking at as you see the development, what the industry is experiencing today and how it's developing?
Thank you for the opportunity to speak to this, Aaron. I think it's an often overlooked element in showing where an industry is in terms of the maturity curve. Financing is not the end all, but it's an indication of how credible the business cases are. And just to share two numbers with you, we've seen in 2024 a bit over 2 billion of investment going into the EV charging space at large, and year to date we're trending towards the same number already. So that's very much indicative of the credibility of the business cases that the EV charging point operators are putting forward. It's fair to say that the different countries in Europe move at different speeds, driven by different degrees of electrification of the automotive fleet. And with that, that also brings challenges from a financing perspective. So one of the key elements that investors and financiers alike are looking at is really the cash generation of the companies and how quickly that is going in lockstep with the utilization rates, so the power delivered per CP, and that is an encouraging graph. So a couple of the countries that are arguably ahead of the pack can provide the relevant data points to support earlier investments in countries which are lagging a bit. And the pattern of uptake, despite differences in geographies, etc., is by and large the same. So that's providing a lot of comfort for the financing community to enter into quite large financing packages or at this point in time. ING has had the pleasure to do so for a couple of the leading players in Europe, including IONITY, where we supported a 450 million debt package. We've raised almost 300 million for Electra, another French CPO, and also, for example, in Portugal for PowerDot. So those are only 3 examples, and there will be quite a few more in the pipeline. And it's sort of an acquired taste in terms of the risk profile. So it does require some education to bring investors up to speed with the specifics of the market dynamics, and to also support the right players. So ING is happily doing that, both in terms of equity raising and debt raising, and ultimately providing balance sheet as well.
Great, thank you. Also, PowerDot, Electra, all ChargeUp members. So great to see that support of the sector. Or maybe it means that ChargeUp is, really the place where the leading companies are all together, so we can develop a common agenda. Because I think that's exactly true. Could you share a little bit about sort of the, you said the risk appetite is different and companies need to be educated or investors need to be educated on what to look for. Could you share a little bit of that? That might be of interest to the broader public as well, help them understand the evolution of the market?
Sure, happy to do so. I think it all starts with the market fundamentals. So we're all well aware, I guess, of the regulatory backstop in terms of the phase outs of ICEs, whenever that will be, the trend line or the direction of travel is quite clear. And everything in the end flows from that. So timing is a critical element. So the different paces of the different electrification journeys in the various countries is key. How we educate financiers is really to get them comfortable with the market outlook for each country and being, let's say, or striking the right balance between being optimistic, but also not too pessimistic. So finding the right middle ground there, I think, is key to support or substantiate the assumed utilization rates, power delivered over time, and also get comfortable with the risk of overbuild or even the risk of underbuild in some cases. There's various, let's say, structural elements that are put into the financings to act as a handbrake, let's say, if things don't pan out as expected. But I think that's something that works well, as we see for both the charging point operators, because in their minds this will never happen, but it will provide the necessary comfort for the lenders and the investors that their money is well spent.
Super. Thank you, Tim. By the way, to the audience, just want to let you know that we're happy to take questions. So if you'd like to, regardless which platform you're watching this webinar on, please submit those questions and we'll try to take them, as many of them as we can in the last few minutes of the event. Tim, I want to move back, Rico, over to you. We've just heard from Tim about how, let's say, the financial perspective is evolving on this topic. We've heard from Dr. Kessler about how the user base is changing a bit as well. Some of the old fears are no longer there, but now there are new demands and new expectations. Can you speak maybe from a more macro level perspective? How do you see EV charging companies adapting and building their strategic positioning in this new era of market development?
That's a good question. Maybe a question also to Meta about the figure you mentioned about the number of BEVs per fast charger. That may give the impression that we have enough fast charging infrastructure already in at least Germany, maybe France. How do you look at this? What's your take on that? And also going forward with the increasing adoption of the EVs in fleet?
Oh, I think, of course, we don't have for every time at the day and every time in the year enough high-power fast charging stations in Germany, for example. And because that is, of course, an average number. But when you look at the overall number, we have enough high-power fast charging stations at the moment for the best on the street. And that's a fact. And it's also not that they're all located in one area of Germany, for example, and there's nothing in the rest. So when you look at the map, it's pretty well distributed, and you can drive through Germany without having the fear that you will not find high power charging station. And that's even high power charging. So what I said, everything above 150 kilowatt. I think we, as an industry, we have to work on ways to distribute better the travel and the drivers around the stations, because what we see very much in our highway stations, that everyone at a weekend or in the holidays come over lunchtime, for example, because everyone wants to charge over lunch, and then they have lunch, and then the drivers stay even longer at the station as they would need, because at high power, especially for us, 350 kilowatt, you are already done from 20 to 80%, depends on your car, but you can be done in 10 to 15 minutes with charging. That's not enough for lunch at a gas station or at a rest area. So we have to find good ways to navigate the cars, the drivers, to make them aware when to leave a station, to make better utilization of the station possible. I think that's very important looking into the future.
Right, that's more or less also management of demand and
exactly, yeah. And then of course we have to build out, we have to build up more stations, but like we have to be mindful about where to build them. I think time is over, especially in the more mature market, to just build everywhere. I think we have to, and that's why also we at IONITY, we analyze a lot of data before we really start to build a station. So we have to be mindful where to build, and then we really have to work with the drivers and with our possibilities also around everything digitalization, what we use in our daily lives for tools to make better use of the stations we have.
Right. And from my perspective, well, I showed this graph of the increasing gap between countries. So it's also highly important to continue to develop infrastructure in lagging countries to enable them to catch up, of course. I would at least argue. And then aside of this, we should keep the pace, of course, with development. With the increasing base of EVs, it's now small still. We're at 3-4% as a share of the fleet in Europe, but it's going to accelerate if you look at where we are on the front side. So that's about to happen in a few years from now. So then we get totally different figures as well from a charger perspective.
Interesting discussion. Thank you. I mean, I would only just add to that, you know, some of the most recent growth we've seen in the last quarter of this year was actually in lesser developed markets, right? Laggard markets, Poland, Czech Republic, really had huge increases in number of vehicle shares. So it's happening. It's happening. Gautier, what about you? What are you seeing on your networks that one or two data points or key insights or things that you're seeing that are helping you, let's say, understand what customers are doing and what their needs are, and how are you building from that?
Yeah, thank you. I would say on our side, the first thing is that all the time we're investing for the next 15 years at least. When we secure a site, we try even to have longer investment with a demand that will grow a lot over time. Whatever is the pace, it will grow, and it will grow a lot over time from where we start. So we are really to cope first with the short term, with not so many EV cars, and because in France we have a high density of charging point today, so we don't have a huge traffic in the first years. But being able also to be there for the next steps and growing. So I think that's the truth today. The cars will be different in 5 years' time. They will be different in 10 years' time. The needs also, and we need to be able to adapt. And for that, the first thing is that, of course, to understand where we are. It's not the same being on a highway or dedicated to transit than to be on a supermarket or areas where people, as Sveta said, are staying 30 minutes, 1 hour. We are not on the highways on our side. So we are always at destinations, and on the average, people are staying 30 minutes. Whatever is the power range, that's the average that we have on our station. So that's something we have to keep in mind. We don't need to have, depending where, but if you don't have a lot of transit, you don't need to have very, very high power, because people just don't come to plug and go back. When you are on the transit station where people want to go fast to their final destinations, so for instance on highway, it will be different. So the first thing is really to analyze what is type of demand, what are the needs. The other things that we say is that people want more and more DC charging. Plugging on the 22 kilowatt or lower power is not very interesting, except if there are price advantage. But we have less and less cases where we have a good, large, heavy price advantage, because there is no reason For us, cost of energy is the same, so no reason. And on the AC charger, you don't sell a lot of energy. So we think that on the public parkings and these places, we need to focus more on DC because you will serve more people, you will deliver more energy, and you don't need to have to take a lot of place as you would with AC charging. So when you look at the regulation, increasing the number of places where you need to put AC, maybe we should, when you do put charging point, we should rather focus on the energy we can deliver on the parking lot, depending on the size of the parking and the size of the destination. I think it's important to have this in mind. People are looking not maybe ultra fast, but at least fast and let's say 30 minutes going to 80% is nice for many people. That's what we measure on our stations. And the first thing which is important is that in looking what we're doing is what is the actual power we can deliver thanks to the network. We are a lot present in France, we're also in Belgium, Italy, and Spain, and it's not the same story. In France, still the networks are good, so we can get within a reasonable period of time, maybe 1 year, the necessary power connection for a station, and then we can grow it. We have entire part of Belgium where it's not possible anymore. And I think that's key, because you can say, I will have extra ultra fast power, chargers. If you just don't have the power available, it doesn't work. As you said, in the Netherlands, we have lots of charging points. It's difficult to get high power. And I think that in terms of policies and the needs is to be able to cope. We don't need to put ultra fast megawatt stations everywhere. And there are places where we need that, and other places where we need small stations, we still need to have enough power to put 1, 2, 3 chargers, DC chargers, 200 kilowatt or more. With actually 200 kilowatt capacity, and not having nice stations and low capacity entrance. So for us, it's also something we see is that for the moment we can cope with that. But if you look at what we need to do in the next few years, that becomes really an obstacle in some areas. So maybe it's not exactly about data, but if we want to cope with these cars that want to have more power, faster, some of them you speak about megawatt chargers, which may be a use case in some cases, and we will have a huge diversity of cars, because many cars won't be able to get a lot of power anyway. And that's the actual market, and it will remain that way because it's much more expensive to have a very big battery. So we will have more different, a lot of new cars are just small batteries, low capacity, but they still need to charge. We don't need ultra fast. So that's the idea, is that diversity, but we need power to the entrance.
Gautier, do you think that there's any tension there between, let's say, more and more high-powered charging and at the same time more affordable electric vehicles, maybe smaller and more affordable vehicles?
I think there is education. A lot of education. If you have a small vehicle that can take 100 kilowatts, you don't need to go on a 300, 400 kilowatt charger. It's useless, and it takes time. And when I've got a car like that on my big charger, then I can sell much less energy in the same amount of time. And I take, if there's somebody behind, he will wait much longer before I can connect. So we need to have different chargers for different type of vehicles. It's not the same everywhere. Again, on long haul, you need high power. Locally, you don't need it. And that's something we have to manage and to learn, because each company has its own strategy. So that's a fact. But also the driver, they need to know that they don't. And that's also some kind of, again, the market is not knowledgeable a lot. And you can do a lot of things. For a small car, you can charge in many places with the same rapidity, whatever.
Yeah. Okay, thank you. We're getting audience questions, and so I do want to move us on a little bit. But Dr. Kessler, I mean, are there things that you are doing at IONITY, let's say at the corporate level, to, based upon what you're learning from EV drivers, to expand into new areas, to sort of offer new products, offer new services, and really build for the future?
Yes, I think so. What we see is that we are entering now or having now a next generation of EV drivers. So we had very much the early adopters now a long time, and now we are like more welcoming the followers or the mass market customers to our network. And this is a new customer group with like different needs and expectations. And like the early adopters, they really like to look at charging curves, and they got themselves sort of educated. Why is that now more slowly or faster? Why do I get that power out of the charger and why not? And the new customer group, they are more like they want charging, they want that it simply works. So every time and any weather, seamlessly along their journey. And of course, we are adapting to these new needs, and we are developing new offerings and new products and also new services. Because and I think that's important, that is a new market. It has not been there, and charging is not like fueling. It will be different, and we are trying something out. I think like everyone in the industry, and not everything what we offer now is there to stay forever. So we are trying to meet demands as they are, but they will developing, and our offerings on services will developing as we go all along this route. And I think charging will be much more a digital experience than fueling was. So we are very much looking into the digital ecosystem of the driver, how we can improve the charging experience by using more digital tools and possibilities we have. That's one of our key strategies looking forward.
Thank you. Thank you. Tim, over to you. You heard what Dr. Kessler just said about innovation, about evolving. There's a question in the chat now also about how do companies stay innovative. How do you and how does the finance community look at this, let's say the need for experimentation and innovation in this market?
The way we consider this is that it's part of remaining competitive in this arguably already quite competitive space. So we have seen evolutions on the technology side and moving along with consumer preferences to provide a superior product experience. Also something that's quite often overlooked. It's not simply a commodity that's being delivered. It's truly a value proposition that the brand promises that consumers are going to. So a key part of that is for companies to continue to evolve that proposition as well, so that in a field of peers they stand out and consumers choose. Let's say DRIVECO or IONITY over some of the peers. Elements like variable pricing, etc. That's something that we increasingly see, and that's, I think, also something that financiers are expecting companies to pursue where that makes sense commercially and also from a competitive point of view. And over time, as we said, or as Gautier mentioned, we do expect to see a bit of a bifurcation or a trifurcation in terms of the market. So it's really providing product or the service that fits the target group that you're chasing. So people in transit or people dwelling for a bit longer when they're going to a supermarket or a shopping mall versus overnight parking, and they're all different use cases that require different propositions and different types of innovations as well.
And so maybe follow, what needs to happen then to ensure that the resources are available for different companies, different places to deploy those innovations or develop them in the first place?
I think first of all, it needs or requires the right mindset of the company. The companies need to recognize this is a key element to their to being competitive and to be able to quickly think on their feet and pivot if they see some things are working, some things are not working. I think companies on the line here have evidence that they can do that. I think it's fair to say not all CPOs in that sense are created equal. So we do expect some shakeout to occur and companies being integrated or acquired simply because they don't have those properties. That's we expect the long-term winners to have in particular on this point.
Okay, thank you. Actually, we have a question on the on one of the chats that's sort of related, and it's about is land availability and regarding the increasing price or availability of land in the first place, maybe competition between high-powered LDV locations or large LDV hubs and heavy-duty vehicle potential locations becoming an issue. And is there a sense that maybe there will be companies that get ready-made locations and then lease or sell them to CPOs to operate? You see that as a viable business model? Anyone on the chat?
So I think we see that land, when you look at the demand from fleets, for example, ride-hailing fleets, they need charging stations, so very fast, ultra-high power charging stations in the very city center of big cities, for example, London, Zone 1, or in the city center of Paris. And that's, of course, high-power charging stations. They are big, like large. It's a problem of space often there, and it's, of course, a problem of cost, because land is costly there. So I think it is, especially when you now look in metropolitan areas, building out more high power charging station in metropolitan area, it's a different game than along the highways or in rural areas. And yes, we see it coming, that there are companies who are developing the land and offering that. If that's a business model to stay, we have to see. Just observe the market. I don't know, Gautier, how are your experiences here?
Yeah.
But that's ours.
Yeah, I agree that our model doesn't really stand for paying for new land and organizing, and the charge is not very expensive. You are paying for the service we provide, but usually we're working on somebody else parking that has another utility than just sustaining a power station. Most of the time, maybe you have huge station that can do it. So I fully agree in the city centers, that's a capacity to have the land, to have the right even to put chargers with high power and good quality. The rest of the country, at least in France and in many places, you have many parkings yet. Issue is more on the power availability than land availability, in my opinion. And on the second side is that it will be totally different for trucks, because trucks, they need a lot of place, they concentrate on the same areas. It's not, you cannot put trucks anywhere on any parkings. So the story will be different in land availability for truck, my belief. And this availability, when they are huge, you say, well, there are huge logistics centers. Anyway, there's competition on land availability, either for charging or for doing something else. In a place where it's more and more difficult to develop new artificialization. You don't want just to use the nature to put in a charging station. That's not the idea of doing something green. That's what we want to charge. Still, it's not only about economics, it's also about that. So I think trucks is another story for me.
Yeah, I agree. Awesome. Totally. At the very end, this warrants a whole nother many days of discussion as well. Another question from the chat is a broader question. How do any of you respond to the claim that the transition to e-mobility in general hurts European competitiveness?
Let me take this one. I would argue that it's very much a short-term discussion from that angle, right? Because in the long run, we need this transition to remain competitive as a car industry in Europe. We now already see Chinese players coming in, gaining market share. So it's a matter of delaying in the interest of profitability of the conventional cars very much. And also I would say the pain of transition of the ecosystem, which requires obviously a lot of change and a lot of organizational change, particularly. So that's difficult, and that's the focus is on at the moment very much, but it's not very much in the interest of long-term competition of the industry. I would argue.
Yeah, maybe for us it will come. Because you see at the speed in which you have progress on the quality of the cars, autonomy, prices, and so on, it will come. So either we are in or out. That's, I said, the Rico. If the industry is not ready, it will come and we lose the industry anyway in 10, 15 years' time. So maybe it's not the political timing, but it's the truth of the long-term vision. And on our side, what we really need is predictability, policy predictability. We need to keep the commitments. Today in our study, nobody believes in 2035 will remain as our limit. I need it to convince, to make the investment. When I put a station, it's when I decide to discuss with a landlord, installing it, it's 2 to 3 years until it's really, we start operating. And then the first year, we don't have a lot of margins because we have a ramp-up effect and we have to be there with the market that is growing. So we are investing over the long term, and I need to have a good perspective. I imagine it's the same for OEM. If you don't give them the right framework, is to say you have said it's 5 years ago, it was told you have 15 years to adapt and to develop the BV. Well, the Chinese car will be there or from other places of the world anyway. So our view is that it's a question of managing the transition, and what we need from the public entities to give predictability, keep the same axis, don't change things, don't give uncertainties, because if you have uncertainties, nobody buys cars, nobody invests in the charging stations, and nobody invests in the network, electricity network. As I said, the electricity network is 10 years time to make the investment sometime. So it's even longer run. So that's the most important thing, is to see the trajectory. And I said, as Rico said, there is the short term and the long term. The long term, we basically need it. How do we accompany? There are difficulties on the short term, if you understand. How we drive to the, I said, hybrid cars, for instance, are they really the solution on the medium term? I think it's not. It's just more expensive and still oil cars. So it won't prepare for the future.
Thank you, Gautier. Tim, what about you? You also talked about policy predictability and its importance for the investment community.
I think that's one leg of the argumentation. I think what we now see in the market, as was alluded to, is just on the back of more affordable models coming to the market, at the inherent superiority of EVs is taking over, as the cost prices, the upfront cost is coming down quite rapidly, and we expect that to continue. So at a certain point, we expect the market forces will simply take over, and consumers will start to prefer what will be quite clearly a superior product. I think there's of course the parallel discussion on whether those products will be, say, European, American, or Asian, but it's no stopping consumers, generally speaking, when faced with a choice between something that's cheaper and better, to keep them from making that choice, and that's really where we see the market being at a pivotal point right now, and that will only accelerate. We anticipate in the coming years, looking at the pipeline of models that are coming to the market that meet all the requirements of consumers.
Maybe one point to add here is that there's a concern about geopolitical dependence, I would call it that way, in terms of batteries, in terms of rare earths, in terms of chips, which we're seeing now. So it's also important to continue to develop and to push ahead with that, to keep track with the EV production in Europe. That's an important one.
Okay, super. Thank you. Tim, are you still with us, or did you have to go? I know it's at 1 now. I was going to ask you a follow-up question. Okay, great. I was just alluding to back to the question about innovation in the chat. I mean, we have benefited from early stage private investment from many different stakeholders, also from the AFI funds and other funds from European Commission via CINEA. But now it seems like we really need to unlock a lot more capital for really large powered network expansion, for investment into the grids, the distribution grids, and all of the related infrastructure, as well as developing the digital tools, let's say harnessing AI in order to optimize things and scale quickly. How do you see the reality of getting those resources, making them available? I guess largely unlocking them through the bank financing and whatnot. Are you frozen?
Who did you ask?
Tim, I was asking to Tim, actually.
Sorry, apologies.
No, that's okay.
Sorry, could you repeat for a second?
Yeah, sure. It was, thus far the industry has benefited from private financing, from early stage investors from different sectors, from, the alternative fuels infrastructure funds, from the European Commission and whatnot. But now we're entering this new phase of the market where there's the need to invest into, let's say, innovative products, software, hardware, kind of energy management tools, things like that, new types of chargers to meet higher power demand from vehicles, things like that. And funding for that will need to come from new sources, I guess largely private banks, I would imagine. Do you see that appetite being there and that investment being there? Where there's
Yeah, apologies. Yeah, my connection dropped for a minute. No, absolutely. I think if anything, we see more and more commercial banks getting comfortable with the risk appetite and advancing on the learning curve. I think most of them are recognize what is needed for these companies to be successful, and the capital that's needed to make them successful. In that sense, we don't see, let's say, an earmarking of funds only for legacy assets or only for specific carved out elements of a business, but really it's across the board for a broad range of corporate purposes, which is exactly what we see that CPOs need to roll out and continue their performance over the coming years.
Super. Thank you very, very much. Last question for the panel was about seasonal peaks. And how are you, so I guess to Dr. Kessler and Gautier, how are you managing seasonal peaks today?
So we, first of all, we of course prepare our network. So we see that we everywhere where we saw big queuing lines the year before or the weeks or months before, we try to expand the sites to have a better offer for our drivers. Then what we did or what we did now in a row of years is that we have site hosts at the sites, like people standing there, managing the queuing, talking to people, also doing a little bit of education. Come back when your car is charged to 80%. Don't stay 1 hour at the rest station and let the others wait. So that's what we do. I think people are still very patient, to be honest, because you see it's travel. It's traveling to the holidays. Everyone is kind of relaxed. A lot of people have kids, dogs. They don't mind to wait a little bit longer. But as I said, I think here we all, as an industry, also with car manufacturers, with the maps, routing possibilities, we have to get better to make better use of the stations we have at the moment to prevent these big peaks at weekends for us in August and July and June.
Yeah, on our side, as I said, we are not on the stations on the highways. We are on destinations mostly, but I've got a few destinations that are very close to highway entrance and we are away of. We see a lot of traffic during the weekends, during the peak seasons, and that shows that we should think differently. In France, with the highways, it's difficult to get out, or people are not used to get out to get their oil, petrol. because we have nice, very nice stations on the power stations on the highway. But you could, well, collectively, it's not the same brand, it's not the same operator, but collectively, we can also manage the fact that you have a lot of stations that are not located exactly on the highway, but not very far. So it's very important to be able to have very good systems in the cars to identify where are the opportunities, where you can charge with transparent pricing, transparent understanding of that's one of the key, so that you can spread the demand on the peak time and people can adapt. They know that, so I think very ways to give the information more in advance. We have also a reservation tool on our app. If people want to book in advance a charging slot, they can do it. And what we have also, we have a lot of stations in smaller cities in the tourist areas. And we see also a lot of seasonal peak. Okay, we have to adapt our model to manage. Again, people are not obliged to come, but they take the opportunity when they go in shopping to charge. So that's also another vision, because we are more complementary to IONITY than exactly the same market. On the way to approach it also.
Super, thank you. Okay, so use the side roads as well. That's a nice way to see the towns that through the countries you're visiting. Okay, very good. Thank you all so much. But I want to give you a chance for one final statement. As you know, Charge Up is an association focused particularly on policy making, on European level policy making, and AFIR is under review next year. The CO2 standards for cars and vans is up for debate right now, and there'll be a big meeting in December in Brussels. What a word, or let's say remark or recommendation would each of you have for policymakers today as they're considering the marketplace to help them ensure stable conditions for private investment and for uptake of the electric vehicle fleet today?
Maybe I can start. Predictability. We are here. We invested in advance of the EV market, and we see that all the ratio shows that we are much more CPs than they are than the ratio targeted by the community. So we are here. We invested a lot of money. If we want to keep investing, we need to have a good predictability on the horizons. Second thing is that we have the early adopters in many countries, and so it goes beyond. We need to have the fleet operators and the company cars to go, because we are late. And now the economies are here, so it's even better for them to have the EV cars. So we have to push and keep pushing on the fleet. So that will give also the good momentum to create also the used car market and so on. So keep the policy, predictability, and push the companies to go there, because economics are there. It's not just about green, it's about finance today.
Thank you, Gautier. Dr. Kessler?
Yeah, I can just agree, Gautier, to what you said. So predictability would be my number one take. And then also what you also said, Gautier, we have to build up the second-hand market to really bring this industry to a mass market adoption. And that will only happen with the second-hand cars. So we are supporting the fleets, as you say, to bring more cars into the market and to make it a mass market in the end.
Super, thank you. Tim?
Can only echo the previous speakers. I think the macro framework staying the course from a regulation perspective is really critical, and also listening to the consumer voices and not stopping people from choosing this 21st century way of transportation is maybe a key message to those stakeholders.
Super, thank you. Rico, final word.
Yeah, thank you. Well, keep continuing to focus on the long run, I would say. So stick to the framework indeed, and conclude that it's already happening, and we're seeing momentum as well. So stick to that, make use of it, and continue.
Super, thank you. And I guess I would only add to make sure that people who you know or you're personally interacting with, have had an experience driving in an electric vehicle, driving an electric vehicle, and even recharging an electric vehicle to really understand what this whole ecosystem is and what we're talking about it. So Thank you all to the panelists. I want to thank the team at ChargeUp for hosting this event and helping put it together. Thank all of you who attended and stuck with us for these extra few minutes. I hope it was valuable. I certainly thought it was worthwhile, and wish you all a very nice rest of your day.
Bye-bye.
Thank you. Bye-bye.